You can't escape the headlines, right? Trade wars, supply chains in chaos, new global conflicts. It really seems like everything is pointing in one direction. But what if the story of globalization isn't really an ending, but more like a dramatic rewrite? Let's dig in and see what's really going on.
So let's just ask the question head on. Is this whole era of a connected world over? Is globalization, the way we've known it for decades, actually dead? Well, that's the big myth we're going to tackle today by looking at what the data really has to say about it.
Okay, so the first thing you need to get is that the reality is way more complicated than just a simple on or off switch. The data doesn't show an end to globalization, but it absolutely shows a major change of pace. And, economists have a pretty great term for this: slowbalization. It's not deglobalization. We're not seeing this massive retreat from the world stage. Instead, think of it as a huge deceleration. The foot has definitely come off the gas pedal of global integration.
And check this out, this is really the core piece of evidence. For decades, world trade as a percentage of the global economy was on an absolute rocket ship. A lot of people called this era hyperglobalization. But that all came to a screeching halt in 2008. After the financial crisis, that crazy growth didn't just slow down, it flatlined. The explosive growth phase, that was officially over.
And we see the exact same pattern with money flows, like foreign direct investment. When companies in one country invest in another, it is the same story. A dramatic peak right before the 2008 crisis, and then boom, a sharp drop. And those investment flows, they've never gotten back to those old, hyper-globalized levels.
It's not just goods and money either, it's people too. If we look at the share of international migrants in the world's population, you can see that while the number is still technically going up, the speed of that growth has slowed way down since about 2010. It's the same story all over again, a slowdown, not a reversal.
Okay, so when you put it all together, trade, investment, and migration, the evidence is pretty clear. We're in an era of slowbalization, not deglobalization. But if the size of the global economy isn't shrinking, something else must be going on. And that's where we get to the real story.
Right now, the most important change happening isn't about how much we trade, it's about who we trade with. The very shape of the global economy is being completely redrawn as we speak. And the key concept here is fragmentation. Basically, it's the idea that the world is breaking up into these different economic clubs, and those clubs are often based on political alliances. So trade and investment inside the club are getting stronger, while the connections between rival clubs are getting a whole lot weaker.
And wow, this data just makes it crystal clear. Take a look at the chart on the left. The red line tracks trade within these allied blocks, while the blue line shows trade between rival blocks. See that dramatic split right after the invasion of Ukraine in 2022? It's undeniable. The chart on the right just confirms it. The gap plummets, showing a clear, measurable shift toward trading with friends and away from rivals.
Now, let's be super clear about this. This isn't about regionalization, where Europe only trades with Europe and Asia only trades with Asia. Nope. The data shows trade between continents is still going strong. The new dividing lines aren't about geography, they're about geopolitics.
And this chart is fascinating because it shows you exactly how companies are getting around all this. That red line, that's direct trade between the US and China, and it's clearly falling. But look at that green line. That's trade with what we're calling connecting countries, places like Mexico and Vietnam, and it is just soaring. So what's that tell us? It suggests supply chains aren't just vanishing, they're actually getting longer and more complicated as they try to bypass all the direct tensions and tariffs.
So, how in the world did we go from this deeply interconnected planet to this new, fragmented reality? Well, it wasn't just one thing. It was a series of seismic shocks that hit the global system one after another after another.
It really all kicks off with the 2008 financial crisis, which just shattered people's confidence in the whole global system. Then you get the political shocks of 2016 with Brexit and the election of Donald Trump. That's followed by the US-China trade war in 2018, the totally unprecedented disruption of the COVID pandemic in 2020, and then finally, the geopolitical earthquake of the war in Ukraine in 2022. Each event just piled on top of the last, fundamentally reshaping our world.
And you can see the political fallout right here in this graph. This chart shows the number of new trade interventions each year. The red line is protectionist stuff, tariffs, restrictions. The blue line is for liberalizing or free trade measures. Since 2009, it hasn't even been a contest. Protectionism is completely taken over as the dominant global trend.
And this quote just captures the new mindset perfectly. For decades, the big idea was that when we trade together, we get along better, it creates stability. But now, that thinking has completely flipped. The new logic is that those same economic ties actually make you vulnerable. So national security and self-reliance are now way more important than pure economic efficiency. And that is what's driving this whole push for fragmentation.
Now, this whole shift isn't just some abstract economic trend. This great reshuffling has real, tangible costs for all of us. So why does any of this matter?
7%. According to some pretty serious estimates, that's the potential long-term loss to global GDP if we end up in a worst-case, severely fragmented world. To put that in perspective, that is the equivalent of wiping out the entire economies of Japan and Germany combined.
So what does that 7% loss actually feel like? Well, it means slower growth for the whole world. It means higher prices for us as consumers because supply chains are just less efficient. It means less innovation because ideas and technology just don't flow as freely. It can lead to more geopolitical instability as these blocs become more hostile. And critically, it means fewer pathways out of poverty for developing countries that really rely on global trade to grow.
So naturally, businesses are scrambling to adapt to this new, riskier world. You hear these terms all the time now. Reshoring, that's just bringing factories back to your home country. Nearshoring is moving them to a country next door, like Mexico for the US. And friendshoring, well, that's moving your production to a politically friendly, allied nation. It is all about one thing: minimizing geopolitical risk.
Which leaves us with the big question, right? Is this it? Is this slowdown, this fragmentation, just our new normal that we have to live with? Or is there a chance to build a new kind of globalization, maybe a re-globalization, that actually learns from the mistakes of the past? You know, one that's more resilient, more inclusive, and ultimately more sustainable. That's really the challenge that's going to define the next chapter of our global story.